This is In Business live from the floor of the New York Stock Exchange. I am Margaret Brennan. This Friday, we open with a rally. Let's see if this latest economic data changes the momentum. Take a look here for the month of January. I'm looking here at ISM non-manufacturing. That number coming in better than expected. A read here of nearly 57 on estimates of 53.2. So that's a read of the service sector of the economy. Majority of activity there. Also, we're looking at a little bit of an older number here in December. Factory orders coming in slightly less than expected, 1.1% increase and an expected rise of 1.5%. But bottom line is this is a positive momentum that we see this morning on the back of a headline that showed that unemployment, well, seems to be getting a little bit better here on the street. You can see 140-point gain Dow Jones Industrial Average, looking at the S&P 500 up also this morning, as is the NASDAQ. More than 1% rally. Let's get a trader's take on this morning's jobs data. I'm here on the floor of the New York Stock Exchange with Ben Willis of Sunrise Securities out in Chicago, Tim Mulholland of China America Capital is looking at bonds, and Bob Iaccino, founder of TraderOutlook.com, is watching Currencies. Tripped over your name there, Bob. Let me start off with you. We saw some strength in the dollar. Is that going to continue?
Well, for the good of the overall economy, I hope not. I think the strength in the dollar should be temporary. This jobs number, you can look at the participation rate. You can look at the reaction of the Aussie dollar, which seems to want to test 110 again, up on the highs of a couple of weeks ago. You look at sort of the weakness in the euro, and it tends to fall into that trap of a strong dollar again. A strong dollar is not what's driving equities higher. Those two have been negatively correlated for a while, so I'm looking for dollar weakness overall. If you believe the U.S. economy is doing better with, again, regardless of participation rate, there were jobs added, I think dollar weakness is in the future. Again, it's Friday, so covering of positions has been pretty typical in this lower volume market that we've had for about the last 16 months.
Tim, it looks like, at least for the moment, the bond market's signaling that they do believe the U.S. economy is getting better.
Well, sure. I think it's also a little unwind. You're seeing that QE thought, that may be a rethink of that policy. But also, let's not forget, the Treasury, we got a $72 billion refunding next week, so a lot of supply, been a huge flow into corporates. So it looks like Treasuries are in a kind of a tough area right now. And given the data that we're getting, you have to think of some unwind on the horizon here.
It's a busy morning out there in Chicago. You can hear the roar here, Ben. Here on the floor, though, we're looking at equities gaining out of the gate. Is this going to hold?
Well, it did blow through some important resistance numbers. We've been looking back from early December, actually, looking to get through 1330 with Tom DeMark making the suggestion we could get there. The question is now, what do we do up above it? I think this is actually makes the sell-off that I'm looking for a little bit stronger on the way down, but these numbers are still extraordinary. We have nothing on China when we report our numbers.
What do you mean by that exactly? You're not believing that?
Well, I mean, the number, it's an election year. The biggest impact came out of a 1.2 million people no longer needing to look for a job. Now, you may call that the baby boomer effect. People are retiring. I don't know, but it's a very convenient allocation of the numbers in an election year.
It's going to be spun both ways by both parties. We're going to bring you the president's remarks live when he does speak at 11 a.m. Eastern time. We also are going to talk through this with some of the economists to see just how well-paying some of those positions are. But meantime, I got to break away and go to Washington. Thank you very much, Ben Willis, Tim, and Bob, for joining us for that Trader's Take.